The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
Okay, not surprisingly, our stock of the day today is Insignia Financial, a $2.9 billion bid, seemingly out of the blue from CC Capital Partners based in the US. $4.30 a share. The Insignia board obviously considering the offer, but you know this comes after an offer from Bain Capital in the middle of December. That offer was at $4, and that was at something like a 30% premium. That was knocked back within 3 days. David Lane, I'll go to you. You mentioned that we've kicked off with a fair bit of M&A. This is a big deal that seems to have come from nowhere. But interestingly, CC Capital has already seen under the hood, if you like, of MLC because they were in the bidding for MLC when
Correct.
NAB sold it off and it went to. So it's all, you know, there's a lot of related party stuff going on here.
Yes, absolutely. Yeah, CC Capital, not widely known in Australia. They've been around since about 2015 in the US and have done a number of big deals, including Dun & Bradstreet, which they did very well out of. But as you said, CC Capital were an underbidder for MLC in the Insignia or IFL bid for that. So they do know the business relatively well and have come in with the bid above the Bain offer at $4.30. We're currently seeing the share price at around the $4 mark. The market doesn't necessarily believe that the bid will necessarily go ahead. It's probably important to point out that both Bain and CC Capital's bids are non-binding at this point in time, so they would have to go through due diligence and also jump through FIRB and a number of other hoops. So it's not necessarily a foregone conclusion, but it is positive, obviously, for Insignia shareholders. And if you can get two different parties or potentially even other parties interested, you tend to get that price war happening, and the bid price could go up higher. So we've currently got a hold on Insignia. We did do analysis when the Bain offer came through. It increased our target price to $3.70. Previously, we had it at $3.25. So we did increase it based on that corporate activity. But yeah, currently $4.30 looks appealing for existing shareholders who've been in it for the last 12 months, but it's still well below where they were, say, 5 years ago. So I'd be holding on and watching and waiting to see what happens in a potential bidding war.
Kai, this is a business that owns, relatively well-known brands in the financial services space. MLC, obviously the big one, but IOOF, Bridges, Shadforth. What is why is private equity so interested in a business like this? Is it purely just they can see they can get in, break it up, sell it off, make a profit, or is there more to it?
Potentially, yes. So there might be a lot of synergies in terms of what they can use the segments for. Potentially they're seeing that, certain segments are worth more in terms of the customer base for them. So that might be one of the reasons why they're offering a premium over what Bain offered. So I think it is a good price. I think which they're offering at $4.30. It's a 7.5% over what Bain was offering. But as they were saying, it's non-binding, so it is still conditional on due diligence. There's still a couple of things to go through. It still has to go through the foreign investment review, so it is a foreign company and it has to go through that. And also APRA has to approve the transaction. So I think that's why you're seeing the share price at about $4, not $4.30, because there is still a likelihood that this transaction is non-binding. It doesn't lead to a conclusion.
So as an investor sitting on the sidelines thinking, well, there's the opportunity for another 30 cents up, or the very real prospect that neither of these come about and it goes back to where it was. Are you a buy, hold, sell? Like, what are the things? I mean, it's a bit of a gamble, really. What do investors have to think about in these situations?
Yeah, with these M&A deals, like most of the relevant information is priced in. So basically, they're putting a floor at $4, saying that it's fairly likely that it will be above $4 because they rejected the Bain offer. But I think obviously, given the likelihood of this transaction going through approval, that's what the premium is for. So I think it's fairly I don't think there's any strategic issues here where foreign investment will. I can't make a definite call. but it's not like a strategic asset or anything like that. So I think there's a high likelihood that if it is at the right price, it will go through.
Okay,
So, yeah.
all right. So basically a hold from both if you're in already, and if you're not, over to you. It's a risk you'd have to weigh up yourself. That is the stock of the day.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.